Hi guys, welcome back to my channel. This video is going to be one of the most important videos that I produced this year, and this video is a review of my performance. Now this is one of the type of videos that I challenge you to find any other crypto reviewer that goes back and looks at their record and identifies how their record holds up to scrutiny, holds up to time, the element of time. The goal of review is so that I can narrow in my performance. I can narrow in my performance to the best performance that I think is possible as a human. Okay? And that is the goal of reviewing my record and changing my model. So it's a self-iterative model. So here's my model. My model makes picks. Here's the picks. Time shows the winners, and then I review my model. Okay? So by reviewing my record, I can change my model to hone in on the high performers and do a better job at picking them and putting more money behind them. Okay? So the goal is to have higher allocations to winners, improve prediction model by reflecting our correlations to winners. Okay, so as I said, you know, like the whole point of this is that I can hone in and improve. So early on, I wasn't using a model. What I would do is I knew I was just super ahead, and then I was like I was going to win just because I was super early. But now I have a model that. You guys have seen my model, this right here. This is my model, and this model is, I will change it, and I have made pretty big changes. I've made changes to it from reviewing my record. You know, right here I've made some changes, right here I've made some changes, right here I've made changes, okay? So I made changes so that I can hone in on the results, and I also made changes here as well. So that is the goal of doing this. Let's go ahead and just review these projects. So early on, I made some bad calls with the EOS ecosystem. I was too bullish on the EOS ecosystem. And you know, my model, if I had my model at that time, I think I wouldn't have picked so many EOS projects and I wouldn't have been so correlated to EOS. However, that being said, people who criticize me for investing in EOS, consider the Binance chain. That is the strongest performing crypto this year so far, or it's one of the strongest performers. And it is based on the 21 validator set that EOS has. So anyone who says that EOS is too centralized to perform, take a look at Binance. Okay, so EOS was in a position to do what Binance did. It's just their incompetence led them to fail at performing as well as Binance did. They didn't have the business sense to accomplish it. However, Binance did. So anyone who tells me that EOS was too centralized to invest in, you don't know anything. You're a moron, because Binance performed extremely well, regardless of being centralized. Okay, so that it doesn't mean anything. So these early projects, one of the early ones, the dApps, Liquid dApps, Vigor, and FIO, they did not perform good against the averages. They did not perform well at all. The good news is I put very, very small allocations into them, and it was also before my model was developed. So, so they, these were just some of my losers. So one of the projects, FIO, why was I wrong? I focused more. I should have focused more on the token model. Once again, I didn't have my model at the time, and but the model has helped me tremendously. I think will help me perform even better. And the CEO never made billion-dollar entities before, and I should have. The CEO doesn't have, he has a good track record, and obviously there's still more time for these projects to do well. But I've sold out of this one since, because I have with the way I pursue the way I'm holding my portfolio is between 15 and 20 projects. And what I do is I remove the worst project when I find better projects, and so I've since removed that one. Okay, so here's one of my first winners, and I did have my model at the time. and it's Binance, okay, and or not Binance, the Bancor token, Bancor. And the biggest reason why I was right was because the team has a strong accomplishment records. They are constantly working, they're constantly delivering, and so finding that correlation between a strong team and a strong delivery and technology, and that the team was capable of delivering, that helped me to identify a winner right here. So that was one of my winners. Let's go ahead and put big X's for the losers. So you can see I had more losers early on, and but you'll notice I have bigger wins as I go further along having my model, and and we'll get into overall performance and stuff like that. Now here's what I'm about to go over. One of the most significant findings: Energy Web. Okay, this token, people were back in the day they were saying I was an idiot for not investing in Energy Web. Okay, so these ones, people, whatever, they didn't have the big opinions of. But this is, Energy Web is my most hated video. Most hated video. Everybody downvoted this video saying it was the most awful video. You're an idiot. Have good luck missing out. Good luck staying poor. That is a result of my Energy Web video. Energy Web was one of the most popular projects when I started doing these reviews. Okay? Now guess what? I was right, okay? My most hated video, I was right. And I was right about it having poor performance, okay? Energy Web has had some of the most poor performance compared to the alts, okay? The alts have this about a 500, the average performance of the alts. And remember, the alts is the average, so you have like extremely good performers and extremely bad performers, and you have them averaged out to equal the average. So, no one's going to have, being close to the average might mean you're just distributed equally, An index would perform as the average, right? Okay, so I was right. My most hated video, the video that told me I was missing out, that I'm an idiot, I was 100% right. Despite major hype, this had major hype. Despite major hype around this Energy Web project, I went against the herd mentality and avoided placing money in poor performance. Why was I right? Because my methodology, especially around the token model, was able to predict the future of poor performance. So this is when my model was really starting to get kicked off. And I even modified my model some more after this because I was like, you know what? I'm going to double down. I'm going to make sure my model is extra right because I know I'm going to get criticized. I know I'm going to get hate whenever I say I'm not going to invest in something. So my model predicted that Energy Web was going to be a poor performer, despite everyone telling me the contrary. So this is an important thing to learn right here from my review, is that if everybody believes something, it doesn't matter. All that matters at the end of the day is the results. Are you going to make money from it or are you not? And Energy Web turned out to be a disaster for everyone who invested in it. And the good news is I avoided it, and that removed that poor performer from my portfolio. Moving on, I also developed my process when I ran into Polkadot. Polkadot is when I really started to get better performance. Because Polkadot opened up my mind to the whole new market arena of what was happening out there. The reason I was in EOS is because I knew there was one thing that everybody was ignorant on, and that was that governance needed to be put into these systems. And Polkadot made me aware that element was around and that it was happening. And I was like, I was too much in my shell, and so Polkadot broke me out of my shell of being wrongly allocated to EOS. So breaking out of EOS was a good thing for me. Like my early correlation to EOS was not a good thing. So if anything, some of my earlier performance was too correlated to that. And that definitely hurt my portfolio. And in the end, I performed as well as Ethereum, even with some of my bad picks in the EOS ecosystem and some of my earlier bad picks before my model. So my later picks helped correct that and get me the same performance as Ethereum. I do believe that I am going to start performing even better, and because of this video and things like that. So let's go over, like Polkadot turned out to be a major win as well. Polkadot was a bit major win. The reason why was I right? Because the token model predicted it, the team record predicted it, and I didn't trade Polkadot. I just hold on to it. It's before I had like my assessment of where I think it'll lie. So, that helps me, get better as well. But here's something that the reason Polkadot helped my portfolio extremely. I had a heavy allocation. I bought a big bag of Polkadot. It's not one of the, like these other ones, I bought like little bags of these. All of these I bought little bags of, so they didn't hurt me that much, right? Polkadot, I was putting a big bet because I had a fairly high conviction on it, because everything about Polkadot is telling me, and it's still my favorite project, even to this day. I think it's going to be one of the ones that really changes the landscape. I think it's a breakthrough, and I still believe that people don't understand that. But yes, Polkadot was one of my major financial wins, and the model predicts it. I haven't run it through the new model, but I know I'm still very confident in Polkadot. Okay, so Wax. I had a very high accuracy with Wax, so there's nothing really to learn from it because I made a very accurate prediction and I was right. So that was one of the ones that my model predicted correctly. So Celsius Network, one of my major wins as well. It was my biggest winner. Celsius is my biggest winner in my portfolio. Okay, and this is when I started doing expected distribution, where I thought it would be on the distribution curve in comparison to the alts, and it was actually on the 2 standard deviations away. Celsius is one of the strongest performers out there, but it was a major financial win. Now, I gave myself an F for the prediction because of how far off I was. I was overly pessimistic on Celsius because I thought it was going to be here. I did say Celsius could be a strong performer because their CEO, but I was, where I put my prediction was too conservative, and it was far more performer than I estimated. So that's why I gave myself an F. And the reason why was because of the strong price performance in the past made me more pessimistic about its future. Obviously, I was bullish, but because it had already done so well, I was like, oh, it probably won't perform that well in the future. And well, I was wrong. Even from this point, it performed extremely well. So why was I wrong? Past performance made me think it wasn't going to perform super strong. So using past performance to measure future performance, that's a mistake I must avoid. Why was I right? Well, I bet on strong experience of the founder, and I was also right for not selling long-term, understanding and I also understood the token model. One of the major reasons I invested in this one was because they have a very strong token model that, whereas depositors make money, the depositors trade tokens for items, which bring them back to the thing they earn yield, which makes them earn money. It's a very good token model to enrich the customers of Celsius. So Tera. Okay, so we're going to go into Tera now. This is my worst call. The Tera project was my worst call. And so this is the one that I dove into heavily. I did some research because I was like, all right, I have to learn every detail so that I don't make this mistake again. Next time I see a project like Tera, I need to understand how to see that this thing is going to perform. And so I did heavy research, and I was very overly pessimistic. I put a failure on every account for this one because Tera is one of my biggest mistakes. Okay, so it was a major financial miss. It's not a loss, it's a miss. Major misallocation. I didn't throw in money to this. I definitely should have. Now, why was I wrong? I did not see past the stablecoin application. I didn't catch their vision. I thought that they were just marketing, like making money from stablecoin transactions, like they just wanted to be like PayPal, or oh, we're just a cash wallet. Like I was like, who cares? Like that was one of my things. Like when I was digging into it, I saw they would continuously talk about making their stablecoin do this and their stablecoin do that. What I didn't see was they were building a whole entire empire in the digital space for that digital dollar or that digital fiat that they generate by burning their token. I didn't catch the token model good enough. I also didn't take into account the social media presence and that it needed more weight. I also should have given more weight to the CEO. The CEO was well accomplished. And, this is one of the things I learned since this time, that I have to give more weight to accomplished CEOs. I focused too much on the revenue side as a payment provider rather than on the ecosystem. And I gave weight, and I also learned to give weight to Korea because Korea tends to perform really well as well. You know, Korea is probably, the South Koreans are probably the most free country in the world. I would think like their citizens seem to be the ones that are going to be the richest because they're the most free country. So they tend to do the best. One of the best performers are usually Korean. Okay, so none of this matters until I make changes. So the changes I've made, I gave more weight to early social media. So if someone's early in the social media space, and I gave more weight to that because I was early to this project. I should have invested in this. More weight to the CEO. So this CEO was a strong CEO. He had a good track record, and I didn't allow that to allow me to make that allocation. I also reduced weight from the mission statement because, you know, like I'm realizing that it's not as important as, I know that having a mission statement is important, but, you know, it's not turning out to be as heavy as I thought in the past. So I removed the weight from it. And more weight to having a live niche, having a live product. So all of those things helped me change. I made changes to my model. And, you know, we'll see all the changes in the end of the video. Okay, so that is my biggest miss so far. And I hope to learn from this and increase my performance drastically from reviewing this in depth. Okay, so the next one, Katana. Not one of my best performers. I was overly optimistic, but this is one I am going to hold because it is a strong project. One of the things I should have done is I probably should have waited to buy. Obviously, it could have performed well, but the reason why it's, you know, I believe that it's not, I should have given more weight to the inflationary forces because this thing has very high inflation. I even said that don't hold this token. You should. And I should not have bought. I shouldn't have bought. I should have waited. I mean, it's not like it's the worst performer ever. And I still am holding it, and I'm going to hold this one long term because it's an excellent project, extremely strong. And, you know, this is just a shorter time frame. This is the time frame since I did this video, you know. So all of these are kind of on a different time frame, but the most recent video is going to be 6 months back because this is a 6-month review. But Katana, you know, yeah, I can see this as being yellow. You know, maybe it'll pay off in the future, but I'm going to hold this because it is a strong project. But the inflationary forces, I do believe, are one of the major reasons it's being held back. I also bought it, you know, before I did my assessment, you know, because I was like, I saw a bunch of Twitter hype. So I was like, oh, it's one of these hype projects. And that was kind of stupid for me as well. But it is a good project, so I'm going to hold it. And I might even add more in the future if it continues to not perform that strong. Why was I right? I expected inflation to offset performance. You know, I even mentioned it in the video that inflation could be a bad factor for that project. So Doc was not a good performer either. And one of the major reasons I bought Doc was because I was desperate to get exposure to Polkadot gems because I noticed a lot of Polkadot gems doing well, so I was like, oh, I need, you know, I was being reactionary rather than pro-actionary. So that was one of the reasons why I invested in Doc, even though it has not been yet a performer like beating the average. And, you know, I've since sold out of that one because I think there's stronger things to be invested in. Okay, so one of the winners, this is a major winner, is Hedera Hashgraph. And I even had a bullseye, meaning I picked exactly where it ended up being. So my biggest mistake is I should have placed in a larger allocation. I should have had higher conviction. Okay, so I need higher conviction for these projects that are strong. And so changes that I've made, I've remodeled red. I've taken away red from social media because I expected high social media exposure to be a bigger weakness than it was, right? One of the reasons I didn't put more in this project is because it already had a pretty high social media exposure. And I realized that that's not something that affects the price that much. So I removed red from social media options. Let me see. Yeah, so you'll see that in the end, that I removed red from the social media options. Why was I right? The experienced founder, recommended by smart people, one of the more notable projects in the space. So Hedera Hashgraph, my biggest mistake was I should have put more money into it. And that's one of the things that I even worked on is in the future to get stronger performance. I come up with a new technique. I'm going to add in the future to projects a conviction score and an allocation size. So if I have stronger conviction of the price that I think is this, that I think I'm accurate, I can give a higher allocation to it. And that is the goal, because I need to increase my performance. I have to get better. That is my goal. So one of the changes that came after this review is that I added conviction scores and added allocation scores, and that way I could compare that to my past and try to develop a conviction to get a stronger conviction to winners. Because I should have put a larger bag into Hedera Hashgraph. And I still think Hedera could be a performer going forward. Okay, so here's another win. Everyone was saying to buy Band Protocol, okay? Band Protocol was popular. It was one of the most popular projects. One of the things I've learned from this review, guys, is popular projects do not give good results. If something's extremely popular, if every YouTuber is telling you to check something out to buy it, they're not good performers, okay? They're not good performers. These popular projects, and I even gave too positive an outlook. That's why I failed myself on the assessment, because I was too positive. I should have been more negative. Popular projects do not produce good results. It was a copy of it's an unoriginal project. It copied Chainlink. It is an oracle that copies the idea from another. You know, these copycats, they're not original thinkers. They don't think in original ways, so they lack innovation in the business and they lack the business edge. Now, Binance Chain, you could even make the argument that they're a copy of many different things, but they have that business edge. So this is, take that for what it is. This project had a lot of hype, and yet it performed poorly. And another thing is it had massive price movement. It was 8x in 2 months. But one of the things to note about this project, once again, is everybody was recommending buying this. Everyone was saying you should buy this, but it turned out to be one of the worst performers because compared to the average, it didn't beat the average. So, and I was even too optimistic about it. And so those are things to consider. Those are things to learn to be better. Okay. Fala, I had an accurate prediction, so there's not much to review there because I had an accurate prediction, and I did have since sold out of Fala because I took my win. And then now here is another one, like Luxo. Luxo is one of my major successes. And I once again, I failed myself on the assessment because I was too pessimistic. I did not buy enough. I should have bought more. I did not give large enough weight to the early early social media. And going with a strong CEO was one of the reasons I was right. This project is one of the strongest performers. It's an outlier. What changes I've made to hone in on these type of projects? More weight to early social media. I was early on Luxo. I should have bought more because I was early. It turns out if you see a project that is strong and it's early before the social media, that turns to be a good indicator. More weight to the CEO record. I gave more weight to the CEO. I modified the CEO. I gave this more weight, the CEO accomplishments, because that's turning out to be such a strong correlation. It's almost determinate on what's going to be performing. And I also gave stronger correlation to social media. And I also removed red, right? There's no red anymore because I realized that this is not harmful. If you have large social media awareness, it's not harmful. But if you have low social media presence, it could be very good. So I added green. Okay. And I gave a conviction, and I added conviction. I should have had a conviction and bought more. And ChainX, it was fairly accurate prediction, so there's not much to learn from that one. All right. So that's a review of my 6-month record, okay? So what changes? That's all that matters at the end of the day is that I made changes, right? So the changes I've made are I've added conviction score, allocation score, like how much money I'm going to put in. I removed the red from social media presence because having a large social media doesn't necessarily hurt you, right? because that's one of the things I've learned. I gave weight to recent price action because projects that have recently pumped are way more likely to be bad performers in the future. That's another thing, a correlation observed. If something pumped, you don't want to buy it because it's more likely to be a bad performer. You can see that right here. I changed some of this to FOMO equals lose money, recent price action, okay? That is a new element, and I gave a lot of weight to it because I noticed things that have recently pumped, they tend to perform poorly, and you don't want to touch them. Add weight to CEO record. That correlation gets stronger and stronger by the day. Add weight to live niche. So another thing I noticed is that if you already have something that's live, you're currently serving a market, that is a strong correlation because you're already set up to have customers. You're already set up providing a service. All right, so I have a theory here. My theory is I can have greater confidence in higher allocations to high convictions because I have narrowed my model to performers through this review process. So this review process that I'm showing you right now is I am making an estimated guess on a theory. My theory is that I can have higher confidence in higher allocations in high convictions. I had to redo this because I miscalculated in the first video. I didn't account for living. I actually live off of my portfolio as well. So this is the return results. This is the ultimate result. This is the most important thing about this review. So Bitcoin, I beat Bitcoin by a lot. I did not beat Ethereum. I did not beat the alts average. And I walked away with about 11x since January 1st, 2020. So one of the things, and this is before I developed my model. This is like 2 years before I developed my model. And, like my portfolio was, in a significant amount of cash before the bull run and things like that. So there's a lot of reasons why. But what this does is catches us up to this video. And I'll be able to keep better track from here. But the bottom line is, from now on, I need to apply this theory. I need to apply this theory, I think, in order to get the better performance that I want, which is to have a greater performance through a self-iterative process. So that I can get better, so that I can give. I think the biggest problem with my strategy up until this point has been that I have not been giving a high enough allocation to projects with high confidence. But I needed to improve my model so that I could do that. But now that I have, I believe that I can start giving higher allocations to those projects. But another thing that I've learned is I think that for the average person, an index will be the best thing to succeed. An index. Something that represents... Now, I don't think this tool is available. I know there's several indexes for several different sectors. But if you look at the top coins, the top 100 coins, I know there's no index that represents the top 100 coins. And, and so that would be the best thing, I think, for cryptocurrency investors who want to give low cognizant effort is if someone provided that in the future, that would be the best thing. And that's something that I'm even realizing. Like, one of the rules they say is no one could ever beat indexes, but unfortunately, I can't just park my money in an index. But that being said, this is the closest thing to an index that I have that I can think of for a broad scope is the Celsius network. What in the future, you guys are learning here first. I think the best thing will be a cross-chain index. And whenever that comes around, you guys can park your money in that. And if you want to get the ticket to riches fast, then what you'll do is you'll try to spot, because I'm going to continue to do these reviews, you'll try to spot things like the Tera, Celsiuses, and the Luxos, and put a higher allocation. So those are the strategies. The thing that I've learned the most from my review is that you're going to want the best strategy for anyone is an index. But that's not available. And the next best strategy is high allocation. a high allocation to winners. And that was one of my biggest flaws. I had several of these winners, but I wasn't giving more weight to them than the ones that didn't do so well. So in the future, that's one of the reasons why I'm walking away with this, modifying it to create this conviction score, this allocation size score, because I am going to start increasing the allocation I give to higher conviction projects that I think are higher up. And after these few modifications, I think I'm going to start walking forward, giving more conviction, more confidence to these conviction scores so that I can hopefully get better returns than what I've performed so far. Now I pose to you, I don't know of any content producers that will put their numbers out like this, but it would have been best if I put everything into an index, did not have the option. Then my next best option would have been to put it all in Ethereum. Unfortunately, I do have some stable coins and I do have some Bitcoin. But another thing you could learn from this review is people who say that you should hold majority in Bitcoin are telling you the wrong thing. In reality, the majority of your position should either be in an index of the alts or in Ethereum. And I'm going to try, like, I don't think I'm ever going to be able to beat, like, I think in the future I'm going to be able to beat Ethereum, because unless Ethereum gets its, gets some of its stuff together, with the high fees and with the EIP 1559, if Ethereum passes that, I mean, you might just want to throw everything in Ethereum. But, also if someone offers an index of the top 100, a cross-chain index, that's probably the best option. And then, I'm probably going to move a big chunk of my portfolio into that index. But my strategy has been, that's one of the reasons I've said to you guys, the reason I choose to go into with Celsius is I think from this movement forward, Celsius is one of the best indexes. It generally serves as an index. All right, guys, so this is one of the most valuable videos of the year. And this is the review of my performance. I don't know of any YouTuber who will put these numbers out. Because it is very hard to beat Bitcoin and Ethereum, and I don't think anyone really does it. And a lot of them do own 50%, 70% Bitcoin, so they're going to have worse performance than this. But one of the things I need to do if I want to increase from here is use my theory, the newly developed theory that if I modify, I can walk away with the theory that I can put higher allocations into high conviction projects, and hopefully that I can move my model to getting my performance to be better. The goal for me is to beat Ethereum, and I think I might be able to do that. An index, I don't think I can do that, but maybe I can. Hey, who knows? If I keep iterating my process, maybe I can get to a point where my portfolio performs better than an index. All right, guys, so if you like this content, like and subscribe. I am going to keep iterating and making sure I develop this process so I can correlate to the most highest performers and put bigger weights there in the future so that I can increase the performance rate. Look forward to producing high value content for you in the future.